HDFC Bank witnesses the biggest fall in over 3 years, slumps more than 8%, loses over 92,000 crore rupees in market cap. Benchmark indices closed 2% lower, weighed mostly by the banking stocks. Broader markets also end in red. All sectors except Nifty IT close in red. Swiggy plans to file for an IPO by the end of FY24. Sources tell NDTV Profit that it's likely to have an OFS along with the fresh issue. Hello and welcome to The Reporter on NDTV Profit. Before we delve deep into the show, let's do a quick market check. We have with us Harsh to bring us more on this. Harsh, the markets were pretty choppy as we all know. What can you tell us about it?
Let's first take a look at where the benchmark stood. You're looking largely at a place where the Nifty 50 itself closed, roughly almost 500 points lower, very close to the day's low. 21,550 was the day's low, so we've closed very close to that, 2.1% lower for the Nifty 50. But the Nifty Bank is what led the bloodbath, at least of sorts. It was a bloodbath for the Nifty Bank in particular. 4.3% lower on the Nifty Bank, 2,000 points wiped out in a single day. Let's also quickly pull up the heat map to try and understand within the Nifty 50 where was the pain, and it was very, very evident that banks were leading the pain. With it, you could see some hints of metal, but all of it was largely eclipsed by that one stock, HDFC Bank, which was down 8.1%. Let's quickly pull up the contributories, and that's where you'll see all the pain. 240 points plus contributed, or nearly 235 points contributed by HDFC Bank alone, out of the 480 point negative contributories and 460 point drop. So more than half the points contributed by HDFC Bank alone in today's trade. But there was some respite within that IT pack, which you can see over there, which was a hint of positive. But with it, HDFC Bank took down several sectors, and let's quickly look at where the advanced decline ratio looked like. Okay, the sectors there took down several sectors along with it. The Nifty Fin, the Nifty PSU Bank, the Nifty Private Bank, of course, all of them were a carpet of red. Outside of Nifty IT, that was the house where there was a bit of comfort, at least today. And with regard to the advanced decline also, you will see largely the day belonged to the declines. The breadth of the market was a tough market, 3:1 in favor nearly of the declines. Last off, let's look at where broader markets closed. Some pain there as well being felt. 1% down on the Nifty mid cap, not as bad as the Nifty 50. Mind you, we've seen a good run up in some of these broader markets as well, and the Nifty small cap as well declined, and therefore overall what we've seen is a day of red, largely led by HDFC, but we've seen from the advanced decline very evidently that there were a lot of stocks which were in the decline, and pretty much all sectors in the red.
Well, that was the market wrap for you, and as my colleague rightly mentioned, HDFC Bank was a stock that eclipsed a lot of the market action during the day. Now, it also recorded the biggest fall in the last 4 years, and as you can see in the chart how it did during the day as well, and lost more than 92,000 crore rupees in market cap. We have with us the banking editor Vishwanath Nair with more on this.
The most important point to me, at least personally, was the deposit growth number. So there we have seen a sequential growth of about 2%, which is really low, and even lower than compared to where the advances growth is for the bank, 4.9% on the advances front. So this is less than half of that in terms of the growth rate. What is also interesting is the flat sort of NIM trajectory that has been announced for the third quarter. Going ahead, it's looking unlikely that there are a lot of levers within the bank's balance sheet to push up that NIM number, because remember, as you go ahead and try to garner more deposits and you try to bring down your credit growth because your LDR or your loan deposit ratio is over 100% at this point in time. So you need to reduce lending and increase deposits. When you start doing that, then the NIM starts getting affected because of it, obviously. And the counter to that is actually quite limited on the HDFC Bank balance sheet. The last bit that I thought was a little bit worrying was the AIF provisioning that the bank has done, about 1,200 odd crore. For a bank to have an AIF portfolio and the bank to have to create a contingent provision, remember this is contingent in nature, so we don't know if there are definitely any assets that need to be provided for, but just the uncertainty itself is a red flag for me.
That was the update on HDFC Bank. Now let's move on to an NDTV Profit exclusive for you. Swiggy plans to file an IPO by the end of this financial year. My colleague Saloni has more on this.
Yes, as you rightly mentioned, Swiggy has, planned to file its DRHP with SEBI by March and April of this year. The size is yet to be finalized, and they are likely to take about 15 days before the filing date to finalize the offer that they will be planning to come up with. What we've also wanted to know from our sources is that the company is going to have an offer for sale, which means that the existing shareholders will likely pair some stake through the IPO, as well as, of course, fresh issue for that same. Process, which is a long-term backer for Swiggy, has about 32% stake, so they also may plan to cut their stake through this IPO that they have intended to even before. Also, one more thing that we've gotten to know is that ICICI Securities, Kotak, JP Morgan are among the lead banking managers for this issue. Now, one thing I want to note is that last year in May, Swiggy's CEO had said in a blog post that the company's food delivery business, actually, which they rely on, has turned profitable. Now, their FY23 earnings are yet to be released on the site, so we don't know that for sure, but that's the word that's come from the CEO. And just to give a comparison from its listed player Zomato also posted about 2 straight quarters of profitability till September. So very interesting space to watch, and we'll have to see exactly how these food delivery platforms will be doing.
Right, thanks so much for that update. Now, we have more updates for you from Davos. Vishnu Som of NDTV spoke to Union Minister for Petroleum Hardeep Singh Puri at Davos, where he highlighted India's commitment to sustainability. He specifically pointed to the country's biofuel and green hydrogen programs. Here's a slice of the conversation for you.
For the last several years, we've seen India become very much a focal point, a point of conversation at the World Economic Forum in Davos. This time around, the WEF is looking very closely at the entire issue of sustainable development, green development. Joining us now, a very special guest, the Union Minister, Hardeep Puri. Thanks very much, sir, for being with us. We'll get to the entire theme of a green transition, sustainable growth. But I wanted your thoughts first on what is happening in the Red Sea and the potential impact to our trade flows. We've already seen attacks taking place. Are you worried in terms of the impact it might have on our economy?
Vishnu, I would have been surprised if you had not opened with the Red Sea question.
Oh, good.
Because
so
it is not only the right question. I think it's a subject which is inviting increasing attention, a fair amount of concern. But if I were to take that to worried, I'm not there yet. And I say that for good reason. First and foremost, I think all the state players involved in this, as against the non-state actors which are responsible for this, all the state players, I'm not convinced any of them genuinely wants to see a conflagration of the situation and breakout of hostilities on a larger scale, number one.
Right.
There will be people who will be pointing fingers. It's not for me to make an assessment whether the non-state actors acted on their own or with some feeling that they would be backed up by others.
Right.
But on the other hand, look at the converse. If you have to unleash bedlam, then why use one? There are other non-state actors with far higher degree of lethality
Right.
who could have come in. My view is that any attempt to disrupt or cause uncertainty, even of a perception variety only, in any of the sea routes which are used by global trade is a matter of concern.
Right.
But at the same time, I think there is enough maturity and wisdom around to be able to navigate, literally, and that word's a pun, navigate around this.
Now, India's story got much more reinforced this year at Davos. And that's what EY's Rajiv Memani told NDTV Profit's Neeraj Shah. He added that last year the mood was relatively much more bearish at WEF compared to this year. Let's have a look at this slice of the conversation.
From a global standpoint, if I was to compare it with last year, I think the mood last year was much more bearish than where it is today. I think people were discussing whether we'll have 1 quarter of recession, slowdown, or 2 quarters, as compared to, and you know, it hasn't been the case. I think things have worked out not perfectly, but not as bad as what people thought it will be. So this year, I find people are, I wouldn't say they are bullish, but they are probably feel that you know, things will start picking up. The interest rate cycle is coming down. Inflation is coming down. Geopolitics is still a concern. AI is still, which way it will happen, is a concern. But overall, I think people feel much better. Europe feels that they'll probably do better than where they did last year. US feels probably they'll be a bit slower than where they were last year. Some pockets of Europe, like Germany and others, may go through slowdown. So that's a global perspective. From an India standpoint, I think last year also the Indian story was very strong, but I think it certainly got much more reinforced this year, because the growth this year really stands out as compared to global growth. People are also seeing whatever was committed in the budget. You know, actually, we've probably done better than that. So overall, I would say things are very, very positive from an India standpoint.
That was from Davos. Now on to another very interesting chat. My colleague Neeraj Shah also spoke to ABB chairman Peter Wasser on the slowdown in globalization, business momentum for 2024 and the next few years. Here's another slice of the conversation for you.
During 2023, we all experienced that we did forecast a slowdown, but it actually never happened in a big way. So we have learned out of that. I think we are carefully still optimistic for 24. I think we are looking at 2 different halves. I think the first half will be more challenged than the second. And I think you need to take a regional lens as well. I think the US, India, Asia except China, I think we'll actually just grow in the normal way, which means strong growth. Europe is lagging, has structural issues, has also had to deal with the pandemic, the wars, high energy prices, cost inflation on wages, etc. So we'll be slower. And China, I would also say they will most probably recover towards the second half of the year, because they have some consumption issues which they need to sort out. So I think, personally, I'm a half-glass full person anyway, and I don't see any other thing for 24 than that.
Okay, and the glass getting filled will probably happen in the second half of the calendar.
Yes, I would say so, yes. It's more, because you see during 2023 we experienced that what we call the short cycle products and orders, they were starting to slow down. At the same time, the late cycle big project business started to come in. So the order books and the revenue books were still actually quite well developed. But I think in the first half of next year, you will see the larger projects slowing down. And most probably the short cycle business will come up at a little bit later in the year, towards the end of second quarter, but normally third and fourth quarter.
Okay. It's also a year wherein, or maybe not just the year, but maybe many years of higher than the past 15 years of interest rates being there. So higher for longer. But in a calendar year where we'll see interest rates possibly come lower, how do you think the world adjusts to, or how do you think corporates like yourself adjust to higher rates, different IRRs projects, different multiples as well, discounting for various assets, including equity or acquisitions? Tell us a bit about that.
Yeah, I think over the last 4 years, ABB has transformed. And we have actually performed very well. including our India business, and we achieved our financial targets a year earlier than expected. That means we go into this interesting period, 24-25, with a strong balance sheet, a well-performing business. And that gives us the opportunities. So I think we are facing clearly a business environment where generations have never lived through high interest rates, have never lived through inflation. And I think, therefore, companies need to prepare themselves. These are different risks which we now have to manage. We have to educate the middle management who, for the first time, have to deal with these issues. Now, on the other side, there's a huge opportunity. Given the strengths we have in the company, we hopefully can take advantage of lower multiples, because lower multiples means you can also do acquisitions, strengthen your businesses, your divisions which we have, and we will be watching for that. It may take a few months more before the multiples really come down. Now, in terms of interest rates, that's where I'm most probably a little bit more conservative. I don't see that many interest rate changes in 24. I think even the US most probably will be very careful, given that the US economy is still growing, so that the inflation is not yet at the level where it should be. So therefore, I think it's also towards the latter part of the year where we will see that. I don't think Europe will actually see interest rate reductions in 2024. That's 25.
Well, that was NDTV Profit at the World Economic Forum in Davos. It's time for a short break, but stay tuned because we have lots more lined up for you on the other side. Welcome back. You're watching The Reporter on NDTV Profit. Now, Byju's has filed an application to refer the insolvency case to arbitration. And this information is according to what its counsel said on Wednesday. The troubled edtech firm has once again expressed its interest in the negotiations with the BCCI in the insolvency proceedings filed against it. We have my colleague Charu Singh joining us with more on this. Charu, what are you making of Byju's at this point? Okay, there might be some audio problem on the side of Charu. Let's move on. Indian banks are now increasingly muscling into the used commercial vehicle segment, a space that has normally been the domain of NBFCs, according to the bankers and analysts that spoke to NDTV Profit. Now, lenders like Federal Bank, Kotak Mahindra Bank, Yes Bank and AU Small Finance Bank are some of the players that are now actively looking to expand in this space. Interestingly, Federal Bank also plans to increase this share close to 10% in the next 1 year. Now, if we look at what is driving this push, we know that with the bank's margins compressing and technological advancements, this space is becoming more lucrative for banks to enter. Now, bankers who spoke to NDTV Profit also explained to us that in a used commercial vehicle, the severity of loss is much less because the lender is actually funding at the depreciated value. The loan-to-value ratio, or the loan-to-value, or LTV as they call it, of a used CV tends to be higher, and even the yield on advances are about 200 to 400 bips higher. Now, that's our special story on the used CV space and how banks are muscling into it. Moving on to a very interesting bit from banks. Deposits still remain a customer favorite in the Indian banking industry. Banks have added 50 lakh crore rupees worth of deposits in less than 3 years, which is the fastest rate at which banks have ever added such an amount over the past 2 decades. We have our colleague Mimansa joining in with more on this.
Yeah, hi Pragati. So Indian banks, as you mentioned, that have added deposits worth rupees 50 lakh crores in less than 3 years, despite the fact that there are far more lucrative options for depositors to park their funds. This has led to the outstanding deposits rising to over rupees 200 lakh crore as of December 29, which is 13.2% higher year on year. So this is the fastest that banks have added over rupees 50 lakh crore over the last 2 decades. So outstanding bank deposits hit the rupees 150 lakh crore mark in March 2021. Before that, the 100 lakh crore rupees mark was hit in March 2017, and 50 lakh crore mark was hit in outstanding deposits in March 2011. So the reduction in time gap for incremental deposit accretion shows that there's a strong deposit growth in the banking system right now. Having said that, financial products such as mutual funds are seeing higher inflows, but the pace of bank deposit accretion is still stronger.
Right, Mimansa, thanks so much for bringing us that very interesting story from the banking space. Now, meanwhile, while we try to reconnect to Charu, let's move on to the stockbroking platform Upstocks. Now, the company has said that its revenue has crossed about 1,000 crore rupee mark in FY23, alongside a 25 crore profit for this fiscal as well. We have a colleague joining us with more on this.
Google Pay and NPCI have signed an MOU. Now the MOU is basically revolved around the global expansion of the unified payments interface, and there are 3 key objectives to this. The first is to broaden the use of UPI payments for foreign tourists. So you and I go to a foreign country, we can simply use UPI to conduct payments there instead of relying solely on forex cards or credit cards or foreign currency there. Apart from that, it is also to establish UPI-like digital payment infrastructure to other countries. That is a part of the India Stack push that has been happening for a while, that we're seeing that the MeitY is also pushing for other countries to adopt. The third is to ease the process of remittances between friendly countries by utilizing the UPI infrastructure that NPCI has put in place over the past few years. So what we're seeing is that there could be a lot of ease coming in for foreign travelers from India.
That was an update on Google Pay and NPCI by my colleague. Now, that's also that we have for you on The Reporter. But for more news and updates, please keep watching NDTV Profit.